We are live. Welcome back to the Team Up Podcast. Today, I did not start my live stream earlier. I actually just got out of the house because I didn't want to be around and even tempt myself to look at what was going on in the market with the FOMC meeting launching today at 2 o'clock. Jerome Powell going to come out and expected to give us a 0.75% rate hike. And I figured the market would probably be pretty volatile, but ultimately sideways. So if you were trading options this morning and listening to the guys, you're probably going to get excited, depressed, excited, depressed, so on and so forth. So that being said, I'm going to rejoin my live call here and let's look at what is actually happening. The S&P 500, it did have a little bit of pre-market movement. It opened at 377.37. So as you can see, we had a nice spike up here to 379.50, a sell-off to 376, and now you're back to almost $1 above open. So while it is a rather larger move on the chart in the 1 minute, when we actually look at it across the day, we're really not seeing that much movement. So what would happen if you're playing the options that we tend to call out in the Discord and the trades that we tend to make is you're going to get theta crushed. Excuse me. So you're going to buy these contracts and the implied volatility is rather high on them. As you can see right now, this is make sure we're on SPY because I'm going to have the wrong thing here, but the implied volatility on the SPY contracts is nearing 100%. And normally these trade around like the 25 to 30% volatility. So leading up to the FOMC meeting, the volatility is so high. Theta on those 0 days is going to absolutely wreck them. So the plan was and still stands to not take any trades at all. Do not risk your money. I'm telling you this is not financial advice, but currently your risk to reward ratio is you're probably going to lose whatever play you think is going in that direction. I know this morning I was listening to the guys and on this run up, there was definitely a bunch of talk spitting out levels of like 380, 381 on SPY, and then clearly rejected it pretty hard to the downside. And now it's getting a bounce back up. And this could continue to be a big bounce to the downside. It could be a bounce to the upside. They could have already priced in the rate hike. They could have partially priced in the rate hike. They could just be stealing retail's money. I don't really know. No one really knows. We're not going to know what happens until it happens. So FOMC, Jerome Powell, 2 p.m. I'm actually going to, I think I'll make a ticker here to play in this thing, just so that we're aware for anyone who wants to join. We'll go ahead and let's see, what do we have here? On the road to 10,000 subs. Let's just edit the scroller here. I just got to pull it up. So I'm going to work on that, test scroll, and patch in the Discord and see what these guys are talking about. And let's enjoy the day. It's still early. I've got some other stuff to do, so I'm going to be bouncing in and out. But rest assured, I am taking no positions at all. We're just going to sit on our hands.
Yeah, that's crazy. Yeah, I never go with the higher time frame because I'm usually scalping. I always use the 1 minute.
All right, so if we do reject here, that's it's not that's not the best head and shoulders though. I'm looking at the 5 minute. Like that left shoulder's messed up though.
Well, I'm actually right now smacking again. MU puts. Oh, just need to drop 42 cents to be in the money.
All right, let's see. SPX. What call are you guys in for SPX? You 3800s or whatever.
No, I got 3800s.
Oh, I'm looking at the wrong day. I was like, why are those 2 grand over?
My shit's still 2 grand, bro. It's like it still says it's 2 grand.
Got the 3840s.
Yeah.
Was looking
I bought
at.
it in the 1880.
Why is this not? Is there a? There's got to be a 3840 for today, right?
Yeah. A call. You're looking for a call right now.
The call, because I'm typing in, it's not popping up.
What are you? I'm looking at 900 bucks.
Yeah, it ain't 7 grand. There's no way. It's out of the money. Oh, the put. Yeah, no, the call. I'm looking at the call.
The call says 9.
0615 SPX.
I was like, what the fuck? I'm staring at the chain.
I forgot the W in it. That's why.
Oh, you fucking dummy.
So weird. You have to put the W in to view the contract, but when you just trade it, you just type in SPX. Ah, yeah. That was a nice spot down there on those, yeah.
You know what, Power? Just send us down to 300. Fuck it. Just rip off the band-aid. Let me kill
Please.
myself. Somebody fucking cash out my spy puts, because they'll probably be up like fucking 20 grand.
Yeah, anything bullish though. I mean, I don't even know where it's gonna go on the upside just because the amount of people short right now. So like, just factor in the short squeeze in any bullish move. Like, shit. I mean, what happens? Might even be able to fill that. I doubt the 390 gap fill, but I mean, it's definitely possible. Yeah, because you're gonna have a short, dude. If we're bullish and then like he starts cranking the market even more on top of what's going on today, just factor in because you have the short squeeze on the upside. You won't really have that on the downside because everyone is pretty much in puts, for the most part, majority of the market.
I watched an hour documentation with Ben Shapiro last night. The show was so funny. He was talking about gas prices.
Oh, I'm gonna have to watch that one then if it's new.
Yeah, I love Ben Shapiro, bro. That man's a
know.
fucking legend.
he's hilarious.
Why aren't you 60? Tell me why. You can identify as man, but tell me why you're not 60.
Right. He has the best like points ever in the world. That. Yeah, they said the similar things to that last year about it too, though. You'd have articles like that pop up. Didn't really
Well,
do
stock
much
is still
for
up
'em.
today, so I guess fuck them then, right?
Would they say 74? You said. It was only like 74 crashes in a year. That's not. Oh, 200.
Oh, boys, we're at 6 cents now.
Nice.
These puts are going to be worth 0.
Oh, you don't know that?
Should I just buy 40 SPX puts and 40 fucking or SPX calls? Let's do that. You know what's gonna happen? It's just gonna, the whole way, wherever it's at right now, it just dots the whole fucking way across until close. You're right.
It did kind of do that the one time. Yeah, we're just. And then what was it, the following day? And then you finally had some like nice continuation or whatever. Yeah.
Come on, bitch, get me in the money. That's what I want.
Alright, so let's bounce here. That's like a double bottom on these 374 puts I'm looking up, right? If they bounce here. Curious how those react. I believe it.
Listen, if you make $5,000 or $500,000 on an NFT, congratulations, but I'm not putting a single dime into it.
Right. It's like any bubble, you had to be in there early to do that, because now I'm pretty sure those definitely aren't paying like they used to, those NFTs.
No care in the world about it.
Wow, and then you have Ethereum price down too from that last point too, so it's... Yes, that thing is way down there.
Like I said, I bought in for so fucking cheap for Bitcoin when I took out that loan. Let me all less than $1,000 and I'd be okay.
Yeah, it'll go a lot higher. I think last year it went for like 7, didn't it? 7 or 8 million.
Oh, Baba, I forgot about them. Let's see, they're probably way up today. No, not really, but... Yeah, 105, 107. Bottom was 104 there. There is a, I think there's a gap on Bob at 110 actually. I wonder if... Oh, I remember that one. Oh no, I remember that one because that's... Yep. I was... It was a... It would. It would be like literally every time I'd have a nice run. It would always get smashed in the following day, and I remember that clear because that used to be. I used to only trade Baba for like the longest time. I would only trade them. Yeah, I remember I was about damn near full port in the calls when it was right at 300 there, because that's when it was doing its earnings. I was like, all right, this is gonna finally break its 300 on this blowout earnings here. Nope. I think that's when the China trade war started. That was the China trade war.
Nope.
they had the blowout earnings. Like they did everything correct. But it was just that China trade war then, so that overpowered literally everything. And that was it.
Just him as well as your own face and there's you know, he was a little bit scared, but like it could too just
Right play, wrong time.
that's big enough to not this like
Not enough balls to hold. Hear me out.
Is Bitcoin going over 20K yet? Let's see.
It tipped it. You know, it was like 20. It did load out. It bottomed out at just over 20.
it probably works 8 hours. He's not 14, he's not 70 and 18.
All the gurus are calling for a major flush as soon as that 20 breaks.
Those are the same people that are calling for 100,000 when it hit 63.
That's just, yeah, I remember I
I
commented.
didn't like Antonio Brown. That was Odell Beckham, my bad.
Gurus are like, I told you the market was gonna tank, and when they were like, I knew I was right.
They
Liars.
the one guy, he has like thousands of followers, wherever he's like, yeah, he said the other day like, yo, you should be buying now. Yeah, obviously when everyone's fearful and everyone thinks it's gonna crack, he's like, I don't think we could even hit 10K. It's not realistic. I was like, I think 10K is a lot more realistic, buddy, than your guys' 100K targets that you say year in and year out for the longest time.
I mean, it's just like everything. The more people that say we can't hit 10,000, the more likely it's going to happen.
Right. Tesla's breaking out. It's trying to right now. 686. They could send it.
And $5 closer in the money now.
Yeah.
That's crazy. Yeah, those Tesla calls I was in when I sold them, they went down 50%. Or about 50%. Yeah, just about. And now they're up almost 100% now. Alright, come on, pal.
And I was
Come
just
on.
about to sell too.
I think put on Spider-Man.
Yeah, how much are those up? Oh, they're not. You're up like a whole. You're like up over $1 since when you bought those, and those are only up about how slow she's doing it.
QQQ is dropping.
Yeah, how much you up right now?
This invalidates all of this stuff.
Yeah, put them in spot. I think found its bottom at $51.
Hey, QQQ is dropping.
Is it?
And I am out. Yeah, I just saw. I jumped in. I was like about to sell, and then 2 1-minute candles just dropped, and I just made $10 right now. That's good.
That's
my wife,
yeah,
my
that's
wife
insane.
told me about that.
That's insane.
That's hot.
What happened? Chick-fil-A. Wow.
Say that was my
hot.
pleasure.
What? Yeah, I think that's
My
the real
pleasure.
reason. Dude. That's just straight mental problems. Like, how? I don't know how it goes through someone's head.
And all the talk about all the things that they're doing on Capitol Hill, the newest gun laws proposal would do nothing to stop actual gun violence, the majority of gun violence. Just sad.
Hey, my state's gonna be a great example of how it plays out, because we're constitutional carry now, so I can be strapped and loaded wherever I want.
Wait, what?
Yeah, Ohio's constitutional carry. It started Monday.
Really?
Yeah. Oh yeah.
That's hot. That's
I'm gonna go
sexy.
check. I'm gonna
'Cause
check
I
Ohio
got
right
my.
now.
That's why I went out and got my gun that I'm gonna use for my concealed carry, and then they came out with that, and that passed. I'm like, oh, I don't have to go for my concealed carry anymore now, because this is gonna go in effect here. And now it is.
Where did you
so.
get it?
I have a Springfield Hellcat. That's gonna be my
You got a nice little Hell Kitty. I like that.
nice little Hellcat. Now we gotta buy a Hellcat to ride in with the Hellcat, you know.
There you
A
go.
All right, now
Hellcat and the
relax.
Hellcat.
We're now relax, all right?
Yeah, it's between that or the Sig. I mean, they're kind of.
A 6 hour.
Yeah, they're kind of close, in my opinion. But
Those motherfuckers are just too expensive, man.
That's why I bought H&K, baby.
yeah, my brother just won one actually in a gun raffle. He put in $50 and won a brand new one. Things like
Fuck yeah.
$650, $600. One of those brand new. The model he got with what he got with it.
Wait, what did he get? Wait, what gun did he win?
Let's see.
God, dude, I miss my gun so much. I feel so stripped right now.
I have a P390 911 edition.
Really?
Yeah, my dad had it. My dad bought
Yeah,
it right
pictures?
after
I want
9/11.
to see that bad boy. I tell you, it'd be so
Done.
sexy.
It's on fire. It's just sitting in the box.
You get the Sig P320. That was got.
I got my stainless steel 50 cal Desert Eagle, man. That thing's fun.
No, that's just a showpiece. I'm not carrying a Desert Eagle fucking anywhere.
No, you wouldn't carry it. And I
Yeah,
had a blued 50 unported. I couldn't even fire that thing. I mean, it like rattles your teeth. But this is a
Yeah.
stainless, but it's ported. So
That is a
it
fuck
doesn't-
around and find out gun.
I'll fuck around if you
Yep.
hit. Like, the
Oh,
fuck,
that
you're gonna
thing.
take like 10 seconds to fucking calm your hand down from shaking. Fucking. I went to a gun range
Yep.
one time and shot one of them bitches, and my fucking hand. I don't have big hands, man, alright? And that bitch hurt.
Yeah.
Oh, I bet.
Yeah, and I mean it's really heavy too. I mean it's like a 4-pound pistol, 5 when the clip's loaded.
Jesus. You just gotta make sure you hit him on the first shot, otherwise you're incapacitated.
Pretty much.
I have a 44 mag barrel and I tend to shoot it almost all the time with a 44 mag. I load 44 mags myself, and so then it's not so expensive to shoot. I mean, 50 cal. I don't need the dies to load it, and I can load 50 cal. But if you buy it, I mean, you're lucky if you can get it for under $1 a round.
Oh yeah, you're.
What,
definitely
the
king
desert?
for-
The 50 caliber AE. ammunition. You're lucky if you can get it for under $1 a round. It's usually pushing more like 2.
Yeah, it's like because my fucking 338 Lapuas are fucking like 185.
You know what really sucks in California? You cannot bring ammunition now
Everything.
from outside sources.
Yeah, everything sucks in California.
Calls are breaking down. Puts are about to break out.
Oh,
yeah.
do I want to put? No, I want to wait though.
Exactly.
I was sideways on that mule, but that didn't stop me.
Sold my call. Now I'm riding.
Which one are you looking at? Looking at Spies? SPX?
on Spies?
Mm.
The 383 call broke down, and the 369 is breaking out.
Ooh, do I? Oh man.
Go to straight to open.
Want it. Want it.
I mean, we just made a higher low.
Yeah, but if it flags here, that's the my one. I always gotta wait for that.
I mean, it kind of. It looks
all
like
the way to
it's
300.
It's an H.
We're gonna wait. I'm gonna wait. I gotta follow the rules. I said I wouldn't do anything till Powell.
The VIX is still over 30.
You definitely could
Yeah,
make it nice.
I just took a straddle, and it worked out pretty well. Sold the call, waiting to average down on the put because it's getting ready to cross over.
Yeah, look at those SPX puts. Hurry up.
Oh, I'm gonna enter another one. I just took one because they were fucking $80 a piece. The call and the put. No sweat off my back.
Alright. Man.
I mean, I got my calls basically going to ship, and my put's going well.
That's what, on a normal
Nice.
day, I would have, yeah, I would definitely been put up there. Sure enough, it's already paying.
I might just get out of these and then buy them back again.
Alright, let's see.
I don't even look at my calls right now. They're probably fucking dirt. Oh no, we're up $20, bro. What the fuck am I talking about?
$20 per contract, or are you talking about $20 total?
$20 like per contract right now. Still not down that much.
What?
Now we're $10 per contract. Oh boy, we're gonna lose this quick. I'm gonna lose this quick.
I was gonna say they are right back on the long entry I had on those SPX though on the calls, so if they were to bounce, it didn't have to be here, but
It's waiting for you to enter before it finds the mega tramp. So whenever you enter, let me know.
oh my god. Can you believe this? I don't know if this is true. I have to confirm this, but it looks like Biden's sending another billion over to Ukraine.
No, the fuck he's not.
Yeah, let me see if I can confirm this. One of my news sources, pretty trusty, just said that. That's insane. That is.
Does anybody really think?
Oh, yep, right here an hour ago. Biden administration expected to announce additional $1 billion in military aid for Ukraine. Yep.
Oh, turning the printers back on, baby.
That's insane.
Here we go. Fuck
Oh
inflation.
Yeah, it's not like we're in the hardest time of inflation right now. Let's just send out more money. Just fuck it,
Paper.
What's
Fuck
money
it.
at this
Did
point now?
anyone really believe that a Ukrainian energy company was going to pay Hunter Biden $80,000 a month? Like with nothing for nothing. That's exactly what's happening. Is all this money going back?
There's some conspiracies on freaking Hunter Biden and Ukraine and all that. As he's been
The
active
laptop's
over
not
there.
really conspiracies.
There's a close below. Cloud's about to cross. She's coming down.
Oh yeah.
I'm just making dollars right now. I mean, I'm gonna make those too, but I mean,
Oh yeah.
or zero.
Or zero. $10.
A sandwich?
What kind of sandwich?
You trying to make me one or what?
Filet sandwich.
Oh man, I want to put now. I think I gotta start entering some.
Oh boy,
It's
come on,
itching
come on.
away.
Come on, dude.
Oh man.
We've done it every single time so far. What makes us any different?
I want to see if they get a
Oh.
lot more cheaper though. That's the only thing. But if we just keep falling from here, they're not gonna get cheaper as much as I want them to.
I just bought myself 5 contracts right now. I am gonna see if I can do this.
Some of these puts dropped 50% from what they opened at this morning, so they're already starting to decay a good amount. But
Mine's got a huge gap in it, from 2 to 115.
Whatever you get, are you buying SPX Montana or no?
that's what I want to play. Yeah.
If you do, I'll buy them for you. Well, not buy them, but I'll play them with you.
Oh, you're gonna just send me the money to buy them for me?
I'll buy. I would.
Cutting out there.
Depends. What are you getting? What are you getting yourself into?
I was looking at maybe like the 3700s. That's what I was eyeing out at this moment. That's about a $7 drop though to get those things in the money though. That's the only thing. I might be too far out.
What are you buying to? I'll be there with you. Cause I got 3,800 calls and 3,750 puts.
Oh wow. That's
Well, maybe if maybe I should go, even though it's at 3,700, maybe a little far out, but kind of cheap. So I think if I do grab some now, might as well go with some of the cheaper ones, and then I could, obviously when he talks, then we could start adding more closer in the money, or if I have to switch sides.
We can switch sides.
Right, right. The one thing is we got this little triangle forming on. That's why I want to see what happens here, though. Look at the kind of like a perfect little triangle forming.
I'm so glad you know your shapes.
Oh, an octagon. I mean, what this
Oh,
is.
okay.
Check for pizza.
What? Like this is This would typically be like a bull setup, though. That's the only thing I'm kind of iffy at. See, 3,700 though, that's not that far out, because if you look at the posted pivots, if we lose this, what was the resistance zone for the day, if we drop back under, I mean, that support zone's not, it's down there at 370, 371. That's not even including if we get a breakdown.
Looks like Tesla's double or triple topping.
Yeah, I was eyeing that one out. Failed at my 386 again. Up there.
Oh, that was stressful.
Next time you need to make a sandwich, put a lot of ghost peppers in it. That way if he eats it, you'll know he ate it.
You know, SPY puts are looking a lot better than SPX though, because those are priced fairly decent. Like a 374 is $2.
Look at the puts on the double and triple leverages. They're not actually too bad.
Yeah. I might have to just go with SPY for this, honestly. I think I'll do that. Because these are only two, like a 374, that's only about $3 away, and there's only $2. I mean, I expect if we do drop and go bearish, we're going in, I'd imagine we probably start getting in the 360s, so those can go to 800, you know, plus from $2. That's a nice gain. That plays out that way. Yeah, I think go ahead and do that. I think that's what I'm gonna do.
Oh man,
Almost
I'm
1
up
hour.
$30 right now. All right, I'm done. I'm done. I'm done.
Baby.
Are you done?
Ah, God.
Oh, there. Look at that candle.
Oh man, yep. Okay. There you go. Guess we'll just hold this put out then until Powell. Zero or hero. Let's get on it. I don't know. They're cheap. We're going on the cheaper side though for now. I'm not going crazy beforehand. Definitely not taking huge positions before that. But definitely, like, if you want something at the best price, and if you are right, it's gonna, within the next half hour, it's gonna be time to start buying it before they start IV jumping half these things here.
AV was at 76.
Usually I'd wait, yeah, usually I'd typically wait another half hour, but...
Hey, Montana, you should look at what happened to QQQ, and I was in MU puts.
Hey Montana, what SPY puts do you get?
Some 374.
0 day?
Yep, 0 day, yep. It's only $2, $2.50 away already, so... Get a... Those would be my going into Powell. You definitely gotta consider how these are pretty risky buying them. You know, buying anything beforehand can be risky, but nice.
Exit, Violet, and Drone.
I said that the biggest problem with those is, I said you start getting over the states by me, especially start going to Virginia and all that. Get all the mountain boys and they see
The
some
boys will shoot them
drones flying
fuckers
around.
down.
That's right. And take the risk that the government's spying on you, you know. So you got a popper.
I think you have to have density in order for a drone model to actually work. So I don't think they would use drones in the country, although maybe I'm not thinking about that right.
Yeah, no, it definitely. I don't think that'll ever be like maybe several years, like way down the road. Drones could be a normal thing, but there's a lot of issues. Because I mean, what happens when say the thing dies or whatever, something goes wrong, and now your package just how many packages are gonna be just lost or laying around?
I'm pretty sure they
somewhere?
will calculate that.
Yeah, I mean the drones that they're using would probably have double redundant batteries, double redundant system, kind of like a satellite, right?
Okay.
So the biggest risk is like what you were just talking about, people shooting them down, or that it doesn't see something in its path. That's the other risk, then it crashes.
Oh yeah, 'cause what if a bird just comes out of nowhere and just boom?
You know, surprisingly, we haven't even beat that kind of technology. Even jumbo planes, I don't say trains, jumbo planes are still getting bird strikes in their engines.
Yeah, because that's a factor you can't really ever get around with that. There's just no way of moving it quick enough out of the way. Yeah, they would have to. Yeah, that
Yeah, I'll be the one dropping them off at your doorstep.
Finger on the delete button.
There you go. When you retire from the military, you gotta, you have a job lined up for you.
Same day deliveries too. Promise you.
Yeah, so I mean, these puts are doing pretty solid.
What'd you
so
get?
far. No, I just went with SPY 374s.
Oh, I'm about to be in the money. I think my puts.
Those SPXs though, they're almost 100%. Those puts, grab them near that top there. Yeah, I seen them go over my long entry, and I'm looking at like the 3670. I just had pulled up the track or whatever, and this went from 360, and they're almost $6 already.
Montana.
Yeah.
On the options before you buy them, how are you tracking them? Like, how do you do that through Thinkorswim? I'm trying to do that.
So when you have your grid set up right with your charts, do you have multiple that you run on your screen?
No, I just run off the mobile, buddy.
Well, you can still look at them on mobile. So yeah, so what you do then? We'll just do an example. Just go to SPY, go over like the option chain. My thing's taking a while to load. Come on. Come on. Okay, and then when you want to like look at the thing you're tracking, just hold down on the option you want then, and then it's gonna pull up. They'll say option details then.
Oh, okay.
And then we're not done yet. Then there's 3 dots in the bottom right corner. You click on that, hit show details, and boom, Now you have the chart of the option contract. So you could see, like I said, on those puts, they kind of double bottom there, and that was a bottom. Now they're already, some of them are up like a very nice percentage already. Play like the double bottom on the chart there.
Appreciate you,
$10
buddy.
away from being in the money. Come on, baby, fall. Give me a little bit more.
So I'm saying we start, let's see. Oh, we're at the bottom of that resistance zone now. So we start dropping out of there. Yeah, like I said, that starts to open up the range down to 370.
Let this bad boy gap back up to 2. That'd be fucking awesome.
You gotta lose 375.9-ish on Posty there.
Why was I not tracking contracts beforehand?
Tracking
Good
contract,
people.
probably I can do paper trading.
I'd imagine we get 374.60-ish for sure, though, from this point. Let's see here. Is this a new low for the day? Oh, it is slightly. It wicked it, though. Let's see if we get a full candle here. The dollar's still popping higher. If you get the dollar start breaking higher, that's gonna be bad.
VIX is about to cross over, or the candles are about to, the cloud's about to cross over.
Oh, he speaks in an hour. That's
Alright, we'll see
1800.
then on VIX.
20.
So typically, before it does that crossover,
Oh, don't
it likes
touch
to
it.
come back down to that point where the crossover is going to happen and test it one last time. Let's see this, yep. VIX drops down there. Let's see. I need to... See, we would really need VIX to jump up after today. If you don't, you're getting inverted hammer on VIX on the weekly. And then, I mean, that could actually, you might actually get a nice market rally then next week. That would indicate close the week out like we are now. That's the only thing I've been thinking about a little bit. Is it too obvious of a short today? You know? I feel like it's too obvious.
That's how I felt for the past 3 days. All we've done is just drop.
I mean, after the CPI, once those numbers came in the way they did, that was definitely justified for doing the drop we did there. But yeah, we've done so much damage since. Oh,
There it goes.
gotta play some Rocket League in the meantime. Yo, it's kind of clean. Okay. I kind of always wondered why, like, they have to do quarter point increments, you know? Like, why does it have to be 0.25 or 0.5 or... I feel like if they gave themselves more options to put it at whatever they want, they could do a better job handling what they are.
I think it's a financial don't want to deal with. Their systems are built on quarter point increments for interest rates. Or at least they were. Now they probably could do it pretty easy, but
Right.
I think we're about to get a leg up here. My contract looks to be bull flagging.
so what? T minus 50 minutes, or is it an hour and 50 minutes still?
It is 1:10 on the East Coast, so 50-ish minutes.
Like 1 minute?
So what?
So like 1 minute, because it's 1:10 on the East Coast is 1 minute from now.
Yeah, 110. So it's not done until 2 on the East Coast time.
Oh, yeah, that's what I was asking. 2 East
Yeah,
Coast.
okay. My bad. I misunderstood what you're saying.
Birdie,
Yeah.
do you have a report I can read or no?
Oh, I'll report?
Yeah, do you have like any news article?
Or what are you talking about?
The China thing?
No. So that's the only. So the reports I have are the same probably reports you get for your 7th AOR.
Okay.
I don't have access to that file anymore since I'm not in the AOR district.
Okay.
Because when I was on the Nimitz, I had access to 3rd, 5th, and 7th Fleet. Now I'm
Yes,
on the
I have buddies right now that are deployed on the Nimitz.
Yeah.
Okay, I'll reach out to. And it happened in the past like 45 minutes?
Well, I mean, there's still the same bullshit that's been going on. I just know the fact that we sent over another billion to fucking Ukraine, so that's my AOR. But I do know the fact that if Russia steps in with China, it's gonna be a fun fucking mess for you over there.
Yeah, I don't wanna. I got 7 months on my contract. I don't want to think about that.
I still got fucking. If that happens, that we might split ourselves over here, and we're gonna go fucking back to Kuwait, and I do not want to go back to Kuwait.
Yeah, so we'll see. Yeah, I'll go to work and I'll see if I can find anything, and I'll get back to you tomorrow morning.
Yeah, let me know what you got. I got all my reports over here that says what you have, you should have, but you probably have more detailed than I do.
Because what do you have? What you have up to TS, right?
Yeah.
Okay. Okay, yeah, I'll see what I can find and see what my people are saying.
You on Nipper, right? You still on Nipper?
I do have Nipper, yes.
Yeah, so we're looking probably the same thing. I just don't have access to those sections anymore. I only have access to the east or like East Coast now.
You only have access to the East Coast?
Well, I meant like that's 2nd, 4th, and 6th.
Yeah, that makes sense. Yes, because of where you're geologically based, but you should. I don't know if you've had access to them before. There's no reason for them to be taken away. That's weird. Yeah, I'll just go to work and I'll see what I can find, and I'll do some digging for the time that I'm at work this afternoon. That's all.
But I still want to know what you have to say about that shit over there for yourself. Dude, I feel like, Nick, you're gonna be fucking swamped.
Yeah, I got another 5 hours before I go to work, so there's going to be stuff that's uncovering. Because when the Ukraine thing happened, it happened like PM my time, and then I went to work the next day like at 11 a.m. So that was like 12 hours of data. So there was so many reports I had to read. So I'll have my.
You probably read like 5 of mine, but you do know I was fucking documenting all of that bullshit down for like at least 2 months in advance, and no one ever looked at it.
I saw it. I'm just like, oh, LOL, someone's playing a prank, and I was keeping my eyeball on it, and then the actual event happens, and all that stuff. All because the Olympics and yada yada yada. So
Probably read like half my reports.
those are half of yours.
I guarantee you half those reports are mine that I post up there.
All right. I mean, yeah, I believe you. But yeah. So yeah, I'll do some digging today. I'll see what I can find, and I'll talk to you tomorrow morning.
I probably almost had like 4 terabytes of data that I had to sort through for like the 2 months of it. And we did a huge ass briefing and we're talking about it. So we sent it up all the way up to our chain of command that sent it up to the SecDef, and he just shot it down like it's not going to happen. And then it happened. I was like, wow, it's the same thing that happened in Afghanistan, didn't it?
Hey guys, something different going on today? I'm kind of confused on what it is. Like, I heard of something going on with the feds and shit. I'm confused on what it is. Oh, I see. I see.
Yeah, as a trader, you definitely want to keep those days in mind going forward.
Do you know when they're announcing it today?
2? Yeah. And then when Powell talks after is when you usually get a lot of action, because then you get a lot of questions that come up, important questions, and you see his view on it then.
Right.
So you'll get an initial move around 2, and then you're definitely going to get another move when he starts talking. The initial move is not always the correct move either, so.
Montana, I'm up $4.50 on those 374s. So
Nice.
that's like half a burrito.
See if we get another bear flag here. It's kind of looking like.
Hey, Montana, another thing you could do instead of playing the indexes is you could actually play VIX.
I could. What are those contracts looking like?
I haven't looked at the actual VIX contracts, but the UVXY, $15 calls are at like $2. Those are in the money.
I told you about, right? We were worried if it would go past 130 or not, but if it stays down for another week and calms down, the next run up, that will, I think, be the final peak. And then after we break through 130 off of that, I will probably begin shorting. Did you not see how much Exxon made first quarter? More than God. That's crazy. Short it now. I don't think it is the time to short now. Again, you could disagree, do what you need to, but again, if it plays in line with the thesis that I could call out prior, I'm going to stick to that plan, and I do believe it's going to come true to a degree with some level of some margin of error. Appreciate what you do. Started watching right before COVID. Rode the TLT cause. Amen, baby. God bless you, and get the long term. How low can XLF? It just depends on the reaction, but I mean, you have bonds. AERC's pop in. That's been a hype play. I mean, I think we could still get down to 2020 levels, but that would take a lot of market cap away.
Do we want to see it hold under 377? Spy rip in there on that. Oh, come on. What are you doing?
What's up, guys?
Hey, what's up, Brian?
How you doing?
Good.
I haven't looked at the charts in like a week, and
Why not?
suddenly we're at what 370? Holy fuck, 377. You guys take trades?
On Tesla calls this morning.
Nice.
And that was it. Now we'll
Alright.
wait.
Took a swing. Oh, go ahead. Finish.
Would you swing?
Oh, I got some spy calls yesterday. Right before
Oh,
close.
okay. There you go. Nice.
I think I got a like 89% return.
Damn. I haven't traded in
And-
a solid 3 months now.
You haven't traded in 3 months?
Yeah, I haven't traded in a while.
Oh. That means you've been here longer than me.
You came in here recently?
I just paid for my 2 months right now.
Nice. Well, welcome in.
Really? Am I welcomed?
Absolutely.
Am I?
Everybody's always welcome, 24/7.
And then I actually was playing ME today.
Oh yeah?
Debit spreads.
Okay.
Yeah. Made how much? 180 today. From
Nice.
everything.
I'm just watching
Kept on doing that straddle. It drops.
That's a good strat.
And
Good
sold.
strat. Yeah.
It goes up. It drops. I sold. Did that several times today.
You guys tuning into FOMC in about 30 minutes?
Oh yeah.
There's a Twitter space, right, Montana?
Yeah. Yep. I'm gonna host it in about 15, and then we're gonna have our dude James. James is crazy with the economics, and he's got a whole slide deck prepared for you guys on Twitter Spaces. So yeah, I think Alex will post an announcement soon.
Oh, so you're like a head honcho here.
Not really. I just do the marketing. Some of the marketing. Let's see.
Yeah, I seen Griffin do his marketing.
Yeah, there's Griffin, me, and then Woj, Nick
And
Rode.
Rave?
And Rave? You want to be on the marketing team?
No, I'm good.
Actually, I will be right back. 1 second.
Yeah, I'm not in anything. We're just gonna watch it, man, because currently I mean look at Tesla. Tesla's moving, but the rest of the market sentiment is clearly doesn't know where it's going to go. Because SPY is literally at open. Open is it's right here. So it hasn't picked a direction. You had some chances today to make a little bit of money on these upside and downside trends. However, the IV on the contract was so high that it's definitely not the news we're used to seeing. The executive order, the expected announcement will be a 0.75, a 0.75% rate hike. That is what the anticipation is. We may see that. We may see 0.5. We may see 1.0. But whether or not it's actually been priced in is another story. Yeah, right now the market is saying, I don't know what you're going to do. Tesla's up 3.5% on the day, which is pretty stout. Moderna call ran pretty good, but it's obviously trickling off. SPX inspired do the same. Right now, the sentiment is let's just kind of chill here. So what Zinc is doing is he is entering a straddle, one on either side, right here. 384 call and a 370 put. One of those will pay out, and one of them will not. So the idea is that the one that pays out 100% be the one you keep, you let it run, and the other one you cut, maybe 20% loss, and you'll still make something. The only way that you don't make anything and you burn both sides is if we get a spike up, a spike down, and it sits right there in the middle. In which case, this strategy here will also not play out. So, being that the meeting starts at 2 o'clock, they're going to come out. It's going to be kind of boring. He's going to talk about soft landing, probably inflation a little bit, rate point hike, and then we're going to have the Q&A, and the Q&A is probably going to determine really which direction the market continues from there on out. If it wants to sell off, it wants to go up, it's going to go absolutely bananas in the meeting. Super risky trades, doing anything. So, that being said, if you are a big risk taker, by all means, play a straddle, buy one on either side, see which one. It's a coin flip with minimized downside, but also keep in mind that it's going to give you an exit, and you better effing take it. Because if you miss the exit, it's a long way around back to where you started. I do believe that we should see SPY 370. Will it happen? I don't know. It's going to be so late in the day that the theta crush is going to just smoke your ass. Bull is currently in a SPX 3860 call that he called out at $4.60. It's currently trading at $4.60, so it's right where he called it out. Even after all this movement, it is back to where it started. So I am saying my entire mindset going into the day was to do absolutely nothing until this happened, because I have witnessed it time and time again where we look like we're going to go a certain direction and then we absolutely get smoked and trade sideways. And while your position is not really that far out of the money or that leg one side or the other, the absolute sideways momentum over time destroys the premium. So that's what traders need to kind of understand. If you're new to this, you don't really know why, or when SPY dipped and I bought a call down here, how come it's not worth that much up here? Because the implied volatility right now is like 100%, high as balls for SPY. Got to keep that in mind. Now I know Montana entered a put 374, so he is down if he's still holding it. He says he's going to run it into the meeting, which is about $2. So you could go a leg, you know, a couple legs out. You could risk here. Say you buy a 374 put at $2. You go the same direction on the call side. So that is $1.73. So the puts are a little more expensive, which would imply that they are actually favoring the downside. And whichever one gets smoked, just cut it. You know, and you could have one go from 2 to 8. You could have yourself a 200 or 300% banger, and the other one you cut at 50% loss. Take a $100 loss on one end, make $500-600 on the other, just off of the meeting. Or you could wait till it picks a direction and then enter something. Don't chase it. We're going to see probably a spike one way or the other. Going to pull back. The pullback is your entry if it's going to continue that direction. If you buy on the spike, you are going to be quite upset. But the plan of the day so far was to not lose any money, not make any bad trades, wait out the decision in the market, and that's what I've stuck to. That's it. And you know, honestly, after the FOMC meeting, I still might not take a trade today. I might just do nothing, you know, at all. That it could be the even smarter play is to wait for the market to kind of shake out. It's only Wednesday. Once Powell speaks, there's still 2 hours left in your trading day. It's a long time.
Minutes.
I'm back to open. I don't give a shit today. Man, I've got Goody Mob stuck in my head right now. All I can think of is Goody Mob.
That's not bad.
Oh, you know, it's like, I peel out sideways. It's gonna be like, I trade stock sideways. Get rich to this. I make money on days.
You the man. You are the man.
Sideways, man. Look at this. Nonsense.
Who is the man, the myth, the legend?
Yeah, that's me.
Nope. Because I have
That would be Birdie.
Birdie is the
Birdie.
legend, for
Birdie's
sure.
the man, the myth. Yes, legend. He's legendary.
Oh, you got a copyright strike.
I'm just a bitch.
What I love to
Alright.
see is this. Oh yeah, Doom. I will also probably sell. Initial move. Obviously, those things start getting to 50, 100%, and it starts going down in our way. Probably cash those out.
Yo, that Twitter space is up right now if you guys wanted to listen in.
Ooh,
just so you
okay.
guys know.
What's the link?
I'll send it into... There's a new chat investors lounge, right? Open.
Yeah, you click on the actual room and it's on the right-hand side of the top corner.
Oh, beautiful. Let me try to share that with you guys.
What is the Twitter space?
Have you heard of
Space
Clubhouse?
where Twitter is.
Yes.
You're
It's
in
like
Clubhouse?
Clubhouse. Yeah, like Twitter pretty much just took that idea.
I mean, whatever happened to
That's how I see it.
It just fall off the wagon. It was a thing. People were using it. Now you don't hear them.
Fomc madness. I'm gonna throw it into announcements actually in Discord.
All right, everyone, start putting in your lottery tickets. I'll be the time if you want to go.
All
for
right,
something.
full port. Let's go. No, just playing.
What are you playing, Montana? Just those puts?
Yeah, I still got those. That's it though. I don't have any calls or anything, but I'll just play it one-sided, and if it goes against me, then I'll just close it out right away.
What? Montana, you are not part of the DJing group. That nonsense.
All right, I'm gonna hop out. Order.
I'm up on all of those positions right now. It's ridiculous.
Oh, we had that nice game on Tesla this morning. I'm trying to keep this going today.
Or you could double it. Or even triple it.
No, I understand.
Or even quadruple it.
That's why if I wait and play the cards right, we still can.
Send me $1,000. I will play it on paper trading. I'll tell you how it worked out. That's a safe bet. Only cost you $1,000 to play the game. Put it all in.
At a.
Do I get best 2 out of 3 or no?
Yes, you do. You get best 2 out of 3.
Oh, sick.
How about at 105% interest rate on that? I'll do that.
105%? That's good.
Yeah. It's the
I
best
don't really
deal we
know.
can
I'm going to
find
have to ask.
nowadays.
I'm gonna ask TD how to send you my paper trade winnings to your paper trade account. We'll figure it out. Just go in there. You got to go in the settings, and I'll tell you how much to add to your account.
I should go on the paper trade account and just do it both ways or whatever.
Should.
Just buy a shit ton both ways. And
Yeah, which way will it go?
yeah,
I will be your
posted,
paper
it
trade.
kind of looks like we got that descending triangle forming, so it's typically a bearish
Man.
pattern. We'll see.
None of that matters, man. I cannot. None
It
of
doesn't
that matters.
matter.
0 patterns matter until 2 p.m. In which case, nothing else matters. It's gonna. If we know one thing over FOMC, it's going to pick a direction, and it's going that way.
So, this is funny. So Sky News, I don't know if anyone knows who that is, or I don't even know what the hell it is, but apparently they tweeted out that they raised it 0.75, and then they deleted the tweet after. They should be doing 0.75. That's what I expect. I say if he doesn't, he's breaking 50 years of history by not doing that. And if Powell was starting to break 50 years of history, I don't know if that is really bearish or bullish then. Yeah.
Here's the play. We're all going to go outside. We're going to stay away from our computer until 3:45 p.m. We're going to come back, full port something. 3:45 to 4 p.m.
15 minutes?
Send it.
You're gonna miss it then.
You're not going to miss anything. If you play SPX 0 days, you're going to get a banger. You're going to miss nothing.
We're trying to today.
Man. You know the smart thing is just to play Friday expirations or something. Just
Actually, the puts, let's see.
How
We
much
need
are they?
SPY to reject more, but you'll have a head and shoulder on the put contracts then, Foreman. Inverse head and shoulder.
Dude, right now I have the call and the put pulled up, and they look identical on SPX. The equal distant contracts.
Kind of, but when the ones I'm looking at, like I said, the puts have an inverse head and shoulder on them, whereas the calls, they did a double bottom today, and they're kind of just in a straight box range when I'm looking at
Ooh,
it.
look at Tesla. Damn. Tesla. Water falling. Jesus. That's an $8 drop. It looks more than $8. Ah, alright then. Do Tesla. Alright, I need to pull up the actual Powell speaking. Where's the White House guy or something? What's he talking?
Come on down. I see this head and here.
Oh, it says watch live at 2:30. That sucks. 2:30.
Look at this. Looking promising.
We got even longer than that. Oh, it's gonna be one of them days, man. Maybe they release the minutes at 2 o'clock. He ain't coming out until 2:30.
Yeah, after the market's fucking bloody red and shit, we're all dying and stabbing each other. Walks out to like a post-apocalyptic world.
Look at that. These are the 3670s SPX puts.
Who
Nice
is?
little inverse head and shoulders. Left shoulder, head, right shoulder. And you can see the neckline up there then.
I'm looking at them. I got them on my chart.
Oh,
I mean, I
yeah.
have the
They might
3655.
be breaking out here shortly, actually. See, as I said that, already up $100-something on those contracts.
Just both. I'm just. Oh. Oh, boys, we're at 14 cents.
What the hell did you buy?
Flush.
Oh, I mean, it's $14. Sorry. But the 360 puts I held from yesterday.
Oh, okay.
Oh, yeah, 374s are back to putting in some work.
Yeah? Where they at? Yeah. 20, 30, up 30 cents a contract. Yeah, no, that was definitely a $1 move on the SPX contracts. How much of a move is it on the?
Yeah, almost
close to the line?
$2 now, from when I seen that right shoulder.
Well, that's your exit right there. Gotta bounce back up where it started.
Look at that, damn. And now this would be them breaking out pretty much any minute now. So let's see if they and SPY should lose this low here. Let's see if it does it.
Stop. Not happening yet. There's time.
Almost there. Oh,
You're about to get a mega tramp. This mindset.
Oh yeah. Yep. Keep coming. That's right. Yep. Uh-huh. Look at that. Almost there.
Was that a $1 move on SPY? Yeah, $1.
$2 almost from the top there. It wicked 378, and then
Where do you see that shit?
when we got the sell-off going.
I'm saying in the last 25 minutes, that consolidation period, 370.
Oh yeah, from if you're going from there, excluding
Yeah.
the wick, then
That's where you got to go from for anyone who's looking to enter it or how they moved in that time frame. You know, if you bought that contract in anywhere in there expecting a drop, now it just got murdered, you know, on that fucking wick right there.
On
That was
10, you jinxed it.
420 to 365 right there. So trust nothing until that man comes out. That vote.
I know it's about to. Dude, the dollar's really dropped. That is bullish. The market, this the sell-off right now on the dollar.
Boom, look at that shit. Right back to where it started. Murdered the contracts is what we do.
7
No.
minutes. 7 minutes.
37 minutes.
Well, till when he starts speaking, we'll work the minutes out here in 7 minutes, right?
The minutes will cause something, but he's gonna really set the tone.
Right. I mean, if we want, depending what way you want, those minutes can get the pregame going.
I'm gonna wait.
1.5%.
And then you at least have a cushion. So say, hopefully it drops off the minutes here, because then we'll have a cushion built on the puts where if we do at the flip sides, we could already close them out, probably hardly lose anything, or maybe have guaranteed profit.
So we bearish or bullish?
I am bearish. I think 370 is on the table for today, but
I'm bullish.
It really depends on what he says.
I'm bullish.
Because look, everyone knows there's a rate hike coming. The question is, what are they going to do about it? That's the question. What's the plan? It's almost like earnings plays where they might crush earnings, but the guidance sucks.
Yeah, but I think if Powell actually does the 74 or the 75, which everyone is predicting he does, and he doesn't stray away with the 50 years, sorry, I'm forgetting your fucking name right now.
Yeah, that's right. We know who you're talking about. It's good.
Yeah, I think we're actually going to see some. I don't think it's going to be like an overall direction change or anything, but I think we'll see some relief in the market at least.
What if he says 100 basis point? Because inflation's pretty bad.
If he goes to 100, I'm bearish. But if he sticks to 75, I'm bullish. I think we'll get a relief rally. I still think we're going to continue the downtrend cycle. Like, don't get me wrong, but I think we'll see some relief. I like to see a little breathing room with SPY and QQQ, maybe a little like 10, 15 point jump up. I don't know. Not in a day, in the next upcoming week. But then again, he also speaks on what, Friday?
I think he's going to say 200 basis points.
The way the dollar's dropping right now is like it is bullish going into
if
this
you're
so
in Bull's
far.
call, you're up a little bit right now. I'd put a stop on that bitch.
Did he
Just
just
in
call
case.
out something?
No, he's been holding that 38.60.
Oh, gotcha.
And right now it's at it's up almost $2 a contract. I'd put a stop.
What do you
on
think
that
that-
bitch just in case.
Do you guys think that the market will react bullish if it stays at the 50 basis point? I don't think he will. Like, I hope we don't, but like, is that like benefiting anyone at that point?
Yeah, see, I don't. It's kind of. This one's crazy, and so this is definitely one of the craziest meetings we've ever gone into. But like 50 now, because you have the what is it, 90%? The market's pricing in a 0.75 rate hike. So if the market doesn't get what they want now, they're more aggressive hike, and you only do 50. Yeah, I think that means like the Fed is still behind and taking their time on getting this shit under control. And I would definitely probably see that as bearish.
Hey, is there gonna be like a live stream?
I mean, they are doing it live.
Sure,
I don't know if it'll be on.
No, I know they're doing it live on Twitter. But
I always just stream it in the trading fraternity, and he streams it. And I just listen to it off of there.
The where?
The trading fraternity. You probably YouTube it though. I don't know if it'll just be on. A lot of the things are usually on YouTube. Okay, you can go on there then.
I'm just gonna lie to Jacob and tell him I made $6 grand and I'm done trading for the day. See what's up. It's really funny. He's real excited. Dude, you missed it.
Nah.
I'm already up like $6,000.
No, I got on the phone.
Damn it. You piece of shit.
Oh, it's live at 2:30 now.
Yeah, it was. The minutes will come out.
That's when the press conference is. They're gonna pull out the snap.
Bull's in a call.
He's in a call?
He's been in it though. It's up almost $2 a contract. But I'm waiting. I haven't taken it.
I just want SPY to go to 370.
I literally just didn't even come home until noon. I was like, I'm not even gonna be at the house. And I listened to a little bit of the Discord action, but you know, I didn't want to even risk being there. Look at that. It's up. It's 460s up to $7. Montana's playing a put into it. Zink is playing both sides. He's playing a SPY call and a SPY put. Like a 383 and a 37. Playing a $7 move either way. I think the smart money is to honestly just wait and see what happens. Wait for it to pick a direction. Don't try to murk the initial one because the contracts are so expensive. The SPX, I mean, you're talking like 20 legs out are still almost $4 or over $4.
Boy.
Because
Oh
the
boy.
implied volatility is so high. And SPY
1 minute.
has not moved. It is at open. It's 30 cents above.
Then
open.
do you know about what the rate
Sideways.
decision is in the minutes, right?
Doesn't mean that you couldn't have made money.
Yeah, isn't it in there?
Just
I
saying.
think
would
it
think it's
is.
probably could be
Oh,
up.
you're
I
okay.
believe so,
All right.
unless he moves it
Pulling up
out.
SPX. Here we go.
And we're gonna see. I mean, they're about to release the Fed minutes, and then shit's gonna spike somewhere here in about 30 seconds. It won't fill. I mean, you have to leave it open. I haven't to ask. There it is. A little bump up. 48.60. Damn, bull got
So we're
himself a
jumping.
boom. Hit $10.
Let's see.
Went from 460 to 10. I got
Acting
spiked,
like
but then
it's
it got ate
already out. What is this? Still
Pump
1
before
minute.
the dump. Pump before the dump.
Yeah, I mean, honestly.
Oh boy.
But once it does pick a direction, then wait. Don't chase it because it's going to happen. Whatever goes up, it's coming back down a little bit before it continues one way or the other. I was going to play it going in. Look at that. Boom.
Oh, dumpy. Come on up.
Murdered that
Yep.
bull
All right,
contract
let's see.
down to 260.
Oh, the chop is crazy.
Oh,
Oh.
5,
Oh no.
75. There it is. We got it. 75.
75 basis.
They did it.
Right. So, should be bullish.
I don't know if that's aggressive enough.
No, they did 75 this time.
Yep, they did 75. It's gonna be bullish.
You think it's gonna be bullish?
Yeah, look at it, dude. We're freaking ripping right now.
Yeah.
Oh.
Wait.
Oh,
Damn, the
man.
contracts, what they're doing. Look at the bid-ass spread. It's
Oh, I
fucking
don't
$2.
believe it.
$3
I don't believe it.
on
It's
SPX.
coming down.
I don't. Oh man,
It's coming down.
man. If I wanted a cheap put right now, it would be the chance.
Oh, it's coming down. It's chopping. It's gonna come down.
Dude,
Oh.
Oh yeah, come on, bring it back down.
wow.
Come on, this wasn't even expected. A week ago, it was only a 3% chance we were getting this. Now here we are.
Back it open.
Oh
I've been
yeah.
saying it the whole fucking
Oh,
time. We need to
Let's
just rip that ball
go.
drop.
Yeah.
Give us a 3 point. Give us 3 basis points. Fucking just or 300. Just rip that shit off.
Honestly.
What are
Get
we
it over
getting?
with.
Oh, we got 75.
75 basis points, huh?
Yep.
Okay,
I'm telling you, he had to follow the trend. It hasn't been broken in 50 years. He had to follow.
It's just dumb. I think it's just dumb because like the Fed has to know that the CPI isn't like an accurate measure of like the most accurate inflation like measure. And so like if they're just taking it lightly, like
It doesn't go anywhere.
it's just
It didn't go anywhere.
it doesn't make any sense. Like they should have just gone for the 1 basis point. Like I mean 3's a little crazy off
Holy
rip,
shit.
but like 1 or 2 like
Worst
it would
case
make
scenario.
sense. It just
What's
seems
Bull's call out? 38.6. He's up.
It's
They're
just-
late. They should have been. They wouldn't really even have to get into these triple and quadruple hikes if they would have already started raising rates at
Sooner, yeah.
at end of last year or the beginning of this year. They should have definitely already started it, and they didn't
Yeah.
do it.
And I don't know if you guys watched Biden's meeting yesterday, but it was just bad. It was like basically like the things he's proposing, like more taxes, more unions, is just going to add more to the inflationary issues. It's just like when your policies aren't working, like
He hasn't
just
powered
back
the
off,
content
let the
you
Fed do its thing. Don't
That's
make
really
any
gonna
more
be the
economic
question
policy.
for
Like
guidance,
you've already
like-
done
I think
Poorly.
370 is
Oh
target.
man, I don't see. I don't even know what to get into.
You see that candle that's right now in the 5 minutes? That thing is fucking upper to lower VWAP.
That
Spread
bitch
out
is
on the
sideways.
That is an insane candle, dude. From
Yeah.
380 to 376, all within this 5-minute candle here.
And we're gonna close in the middle of it.
It goes sideways. Back to open.
Back to where it was.
Look at that shit. Did you see the bid-ask spread on the SPS contracts? It was like
Oh my gosh,
$2.60 to $10.
And get the broad input
$7.
That's crazy.
Yeah, Bull's contract was like 10 ask and 260 bid.
One of the Fed's most recognizable
Oh, come on.
functions
Bring me under
is conducting
374 and I'll
US
for sure know. I think we're going
which
to start
involves
dropping
influencing
high.
Oh man,
and the
this is
availability
insane.
of money and credit in our economy.
Congress has tasked the Fed
Where
with
is it gonna
implementing
go?
monetary policies
Nobody knows.
that promote maximum
Dude,
employment
VIX is
and stable
skyrocketing.
prices.
Yeah, VIX
VIX is
High
at
levels of
32
employment
from
provide people
30
with
there in
more
that
economic
candle.
opportunities,
Look at the
stable
volatility.
Oh
Up 30%
my.
on SPY.
Is that a real candle on VIX? Because that is even more wild than SPY right now.
Monetary policy
That's
decisions
insane.
of the Fed are made by the Federal Open Market Committee.
I
which
mean, there's
includes
some
all 7 members of the Board
wrong.
of Governors and presidents from the reserve banks.
What are we
This
gonna
committee
do?
meets
Here we go.
to assess the conditions.
Push it down.
Oh,
It's gonna bounce back
gosh,
up.
this is insane.
Trust nothing.
The Federal
Dumpy
Reserve
dumpy.
also
I'm up $300, 310, 320.
and works to promote a stable financial system for consumers, communities,
Look at
and businesses.
Tesla.
The Fed also works with communities, nonprofit
How low?
organizations,
Here we
and
go.
others across the nation
Oh, yeah.
to address housing
Here we go.
problems, promote equal access to credit,
Feeling good about
and
your
advance
puts?
economic and community development.
The Fed also promotes stability in the financial
Yeah, we had to make up because I think I was in Tesla puts with you on Friday and it just chopped sideways. It wouldn't break it,
The Fed also
and
acts as a
then
bank to other banks,
it was just bad.
clearing checks, making electronic
I'm
payments,
watching them.
and providing the currency. that
Dude, the
Americans
bid-ask
use.
spread on these is crazy. $50? Shit.
The Fed is working every day
50
to address
cent
these
spread.
challenges and is committed to
70
helping
cent
foster
spread.
good economic
We need under
growth,
374. Come on.
employment opportunities,
I'm
stable
gonna buy that
prices,
thing
and
Give me under
immediately lose 50
374.
bucks.
that benefit all Americans.
Or 374.60.
Also, the Fed.
To learn more about the Federal Reserve, you'll find a wide
Do you
range
think
of
the market's
resources
reacting
on
like this
board.gov
because
website
like
at
it isn't aggressive enough?
federalreserve.gov.
It hasn't really moved at all.
But this means Powell was completely wrong, right? Because I mean, he hinted at 75, but like, that's not what he planned at all coming into this meeting. Within like the past month or so, so he was completely wrong, and I think he's
Well, no, bid-ask spread is still crazy.
he's scared, man.
Well, at least he's consistent with the current administration.
Ah, man, this is holding up
Yeah.
pretty well. This is holding up pretty well overall. I think I'll-
Come on, keep coming, keep coming.
If you look at the
He said
No,
that they
whatever.
could actually raise up to 1% if they needed to.
There we go. There we go.
That might be
Yeah, you inputs, Montana?
He has been in 374.
Yeah,
I don't trust it.
Alexa, play way
Oh.
down we go.
We're going into the red for the day.
You guys want to
And it
secure
would-
profit before Powell even talks? You can, but I mean, it could just accelerate this now.
Owen. She's gonna get another bounce. Is she? Most likely. On
Nice.
contracts, that hurts. If you're an SPX, that hurts. Right there. Especially
Talking
with
about
that
the green?
spread. Yeah. If you're trying to SPX puts, I mean, that bid-ask spread is insane. 50 cents. Some of them are
Dang,
more
it's-
than 50.
Yeah.
So that one green
Dude,
is
these
entry
charts
point.
all across are just.
We could easily see a 1 minute green engulfing candle as soon as that dude comes out.
You could.
Yeah, no, I mean, it's
Could,
legit-
but I just. I don't know. I don't.
We've seen it happen. I'm just telling anyone who's out here listening to this that it is. If you are watching these contract movements, they're crazy. Normally, SPX is 20-cent bid-ask spread. This is high as shit. You're immediately, if you buy it, enter it now and regret it and sell it, you're going to lose $50 off the jump.
It's only money.
That's only one.
I think it hasn't picked a direction at all. I think it's very possible it could engulf that. That's what happened for it. Both directions still on the table. The implied volatility is so fucking high that the contracts aren't really moving at all. That put that I had up went 460 to 60 back to 490. That's on the buy side. That's not on the sell side.
How well did your put do the one that you had almost at 30 cents?
Which one?
Birdie had one. I think it's like 30 or something like that.
Oh yeah, Birdie had those.
Oh yeah,
He had
Birdie.
the 3600.
Oh, he's probably in the lie. He's probably in that Twitter thing space.
Yeah. But yours, Montana, went up what to like? Did you close that thing when it spiked down?
I did take. Yeah, it was like 40-some%. You know.
Oh.
Yeah, take it. You know.
Yeah, because I was gonna say that thing was sitting
Yeah,
right around.
now I can wait for Powell, and then we could go round 2 now. As soon as
much.
he speaks.
Yeah, see that right there? That right there is a $200 candle on this next contract. $2 movie candle. And I'm looking at like 3660 contracts. That's some real risk area at this point.
Everything's still positive right now.
So what's going on? Are we getting like buy volume or something?
We're waiting.
Why is it green?
We're waiting for
Not really getting much buy volume. I mean, it's been down. It's pretty much consistently kind of holding these now. So.
Mega Tramp.
Oh, dude, I'm just so. I really want to go back into the puts and then SPX now this time, but like you said, those spreads are just.
The spread's crazy.
Wild, and I know Powell can wipe me out 300 in a second.
Powell.
That's gonna go from 450 to $1 in about 35 milliseconds. I mean, look, this one right here is still sitting at, on the buy side of it, it's back to 490 after that. That is not aggressive enough. I said today could be a day where I don't make any damn money. I just watch this shit unfold. But I think going into it, once you get some guidance, we'll really pick the direction. Look at the Bollinger Bands on the 1 minute going into that fucking Fed meeting. I'll type that down. And then opened up.
Supposedly he's going to speak at 2:30. And so in 19 more minutes.
Patience is the key today. You want to go to a safe place? Tesla 700 call.
I got out of my MU puts friggin' $300 for 10 contracts. That was insane.
Hey, Montana, what kind of candle is that on the freaking Bix? Do you see that? Like, it's like a perfect almost.
Oh my God! Wait, yeah, Vix. Wait. Yeah, I knew that was a fake candle. I knew that had been a fake candle because you don't ever see a $2 jump in Vix in one candle. That's.
You see
well, it just erased everything.
Who is that? That noise?
Oh, sorry, that's me. Sorry, my bad. I'll mute myself. I'm waiting on the. I got the freaking the live stream for the Fed on my YouTube and also Bloomberg at the same time.
I hear ya.
I don't know, man. I think it's holding up pretty well. This could be a bullish move right here. It's holding up pretty well.
Well, it's right on my pivot point for the day. Like I said,
None of that matters. Stop saying that. It doesn't care.
It does matter.
It doesn't matter.
Charts
Don't say that. I want it to go down.
Why?
Stop it. You were saying 381 earlier. Stop. Wait until the man opens his mouth. Stop it, Montana. Buy puts. Stop it. Hasn't moved.
Boy, let me tell you right now how much I was screaming in my mic and none of you guys heard me.
We heard you.
Hey,
we
what
didn't
would
even
that
hear you
put
through the
go? That
headphones.
was
No, we didn't hear you.
6 cents, Birdie. What'd that thing go to? Anything or?
Oh, bro. So I sold my calls as soon as we got up. Bro, those bitches ran. And then the puts right now, boy, I sold half.
We heard you. I opened the door. I could hear you from outside.
I was screaming. My wife was like, "What the fuck's wrong with you?" And I was like, "We're going to hell."
We're going straight to hell.
That's the biggest hike since 1994 that we just got today.
The biggest rate hike.
I wasn't
since
even alive.
That's nice.
I wasn't even alive.
Oh, yeah. Look at the freaking decay on those puts. Wow. Move it up, Jacob. You're going to be if you're looking for a put side, you're going to be looking at a 3680.
3680?
You're looking at a
my
$500 risk. That's my maximum risk on the day.
Anyone getting spy calls from here?
Hey, unstep and mute your mic.
Nah, no spy calls. We want it to go down.
No calls. We don't want that.
Oof, that 3860 call got smoked if you didn't get out of it.
My put is smoked.
That 3860 is down at 280.
Oh, my fucking 30 or 360 fucking put on SPY is at 15.
Damn. Alright. Is that good? Where'd you enter at?
62!
You're at 62 at 15? Okay, never mind.
Is that the one that you bought for $19?
No, that right now is trading at 27 right now, 28.
Hey, how did Zinks play out? What did he do?
Yeah.
13% on puts, plus 3 on the calls. 13% on puts, 25% on calls. Getting out of straddle at plus $26 per straddle, 15% gain. That's a win. I mean, how much did you have to leverage to get that? I didn't even look. Not much. 100 and...
He comes on and speaks soon, right? In what, 15 minutes?
Yeah.
15.
Well, the world's not on fire yet, so he's safe.
So Zinc leveraged $180.
Man, we're giving back everything we just dropped right now.
Back to where we
sucks.
started. God, oh, look at that.
Yeah.
Good.
Fucking, they'll do the real move tomorrow.
Now you can actually bring back your analysis, just block out that section of the day, and you can start over.
So Montana. So are we is SPY going to 400 then?
No.
It's held the pivot point for the day, so I mean, it's already bouncing nice off of there. I don't know.
You good move on Tesla, though, isn't it? That's the 670, yeah, $16.
So chart wise, I would say chart wise as of now, definitely has
Also
400 in it by the end of the month. You know.
Bulls calls coming back to life.
See that
Oh, it's
first
a big
initial
shot a
move, not always the right ones.
No, it's not.
Nope, but I bought back in the call, so we're gonna figure out how the fuck this goes.
You brought back in the call?
Are you?
Uh-oh.
Yeah, I already did.
Oh shit, okay. Am I getting a call? No. So, the degens are buying calls.
Yeah, man.
Anything that moves.
Force today.
Anything that fucking moves. Or in there.
Tesla's breaking out.
Tesla was like, now that we got that over with, let's go back to 700.
Yeah, damn Tesla. Wow. Wow, wow, wow.
Elon said, "Fuck this shit. We're out." Go ahead, buddy. You take it home.
Yeah, right.
You come back to 700. Make sure you touch 785 on your way up.
See if VIX goes under 30 here now.
My son just sent me a text. He said, I made 4 cents on TikTok live streaming video games for an hour. And I was like, well, it's not zero.
So, Fed policymakers projections show they expect to start cutting rates in 2024.
All day. He'd be driving a Lambo right now. Look at it not taking a direction.
They're cutting rates in 2024. I mean, that's... Shit, that's still 2 years from now. A year and a half. What's the market generally trade at? About 6 months in advance, I'd say.
Uh-oh. Wow.
Yeah, man, I don't even know.
Dude, me 3 months ago would be really mad right now. I would have lost a solid chunk of money right now by not waiting it out. For sure.
So I said, yeah, we have the whole Fed's catching up now, so that's the bullish case. But like, isn't there some sort of consequences now for them having to do this stuff? That's what I'm trying to think.
There you go.
Have to do a call.
I would know. Damn, 10 minutes.
Dude, I'm about to double these fucking these calls again.
You mean you're about to buy double? Because there's no way they move that much.
No, I bought them for 9 and we're at 14, so.
What the hell are you buying?
3800s. I sold my 3800 at the top of the last candle, or the first red, right?
Okay.
And then I fucking switched and went with my puts. I sold them when they touched my blue line, because I didn't think they were going to do any more than that. Then after that, bought calls again.
So 30's playing 3,800.
Sorry for
at $9. It's
interrupting.
at
Hang on a
14.
second. That
Off of that.
Harley Davidson thing from yesterday is up 975%.
No way, is it? That's insane.
Yeah, dude. Hog 975%. I'm selling it right.
That is, yeah, that is awesome. Let me go look at their chart. I want to go see that. That's hog.
What's Harley's and Davidson's ticker?
HOG, it's hog.
Really?
Yeah.
What play is up 900% on Hog when they've only moved?
Betting it. We've been in one for a while.
Look at that entry point right there, buddy. What you doing over there, Jacob? What you looking at?
Fuck, man, I just want confirmation on that. I just want confirmation on that execution. Shit, dude. That's insane.
And for Fed. Oh yeah, we'll have a soft landing. There's a 0.75.
What soft landing?
You know, we have the soft landing. There's carpet at the bottom of the stairs. We laid it out. The stairs are made of concrete. They also have spikes on them. But the bottom, soft.
don't worry, there's a pillow at the bottom there, though. Once you're done falling, you'll hit the pillow.
It's only 68 flights down, so don't worry about it.
Just fall down like the stairs of the Capitol building or some shit. Forever.
It's like the Statue of Liberty.
Yeah. Play Rocky in reverse. That's what we're doing right now. It's not running upstairs. We're not falling down ambitious.
That's fun.
Birdie, the Fed is trying to do the Greyhound landing. You know when you get to the ship.
Jesus Christ.
That's the soft landing they're trying to do.
Probably, but that shit's fucking. There you go.
Look at this nonsense. Look at this nonsense.
Let's go.
All right. Oh man, I want the put so bad right now before it starts doing anything else.
In the words of Palpatine, do it.
6 minutes though.
I wish you could load up one
I'm in
page on TD.
I'm in the 3670s.
3670 puts, huh?
Yep, that's what I'm in.
All right. I'm not. I looked at them. I'm looking at both of them. I'm just not doing shit. I'm only gonna make one trade. Only risking one trade today, and that's it. Fucking chasing shit.
I'm looking actually at the 3650s.
Holding this pivot.
38, 35 calls. Yeah, it's holding up really well. I think there's some sentiment for it to maybe get back to that 378 marker. Just based on the way it's holding up. It's all going to come down to what he says. That's it. Nothing else matters.
You know, somebody needs to tell the Fed that this little music that they put for while everybody's holding, like literally can drive you insane. Like it's it's like music from the elevators. Just drives me crazy.
Love it. Perfect.
Damn, I already lost $100-something just like that.
That's a fact. Looking at SPX.
If we get underneath this point right here.
No, stop it. Let him come
No,
out
I
and
want
talk.
it to go down. We need it to go down.
If you need it to go down, you need Powell to come out and say some shit that people don't like. The TA is irrelevant until that man does something. The market opens when he opens his mouth. Period.
I don't know. Why are we holding right on this pivot point?
Because he hasn't come out and said shit. That's why. Because
That's right.
it was priced in.
Look at that. The TA's working. It's
That's
holding
the
right on this
argument,
pivot point.
is that it was priced into him going in and saying that. And that's why we had it moved.
Right, it wasn't even priced in a week ago. They say it was a 3% chance we were going to get this 0.75 hike a few days ago. It's hard to believe this was priced in.
I think it's priced in. I think the people that make the big moves already knew what was happening. That's why they got it down to where it's at now. The question is he going to come out and say things that make them happy or sad? And how does the rest of the world react to it? I'm talking probably like the top 1-2% maybe. People that have
probably is going to
momentum
rip.
here.
This thing is going to...
What are the small guys going to do?
I'm asking.
I'm sure, like right now, Powell is talking with Pelosi, and they're already talking to their broker.
Pelosi's like, I'm gonna send it.
I'm buying puts. That's what they're talking about.
She's gonna go buy 100,000 shares of some bullshit stock, and then she's gonna sell covered fucking calls on all that shit. A bunch of schmucks. They're like, she bought a ton of Roblox. All right, cool. Sell options on it.
3 minutes. Come on. What you got for me?
Imagine that concept. You buy like 10,000 shares of a stock. It goes way up. Whatever. You buy a bunch. Then you just start selling covered contracts as the stock is going down into nothing. You make all your money off the premium and then just dump whatever's left of the shares. Imagine that concept. Look at it. Thinking about it.
Okay, my 75,000 shares of TQQQ will move the market like a 0.0 like 1,000%.
Dude, I was sitting there with the guys at the gym. He was trying to buy sundial, like 100 grand worth of sundial.
Oh God!
I was like, don't do that. He's like, I'm going to send it. It's going to go up. I'm like, it's definitely not going up, but it wouldn't let him. It said it would affect the, it would have too big of an impact on the market to send that one solid order through. We'd have to break it way up.
That's wild.
It is wild.
I mean,
for how
on
much?
fucking
It was
Webull, man.
100 grand.
Webull
per
over
share. So
100
it'd been
grand.
like 200,000 shares.
Something strange is happening. I had a bunch of options that were like minus like 50, 60%, and now one of them's at 400. One of them says 4,200%. One of them
Sell
says
it.
50%.
Sell all of it.
Sell it. Sell it. Just sell it green. If it's green, sell it. Just stop. Stop.
Obviously,
Sell it.
like what? No, I'm not. I'm waiting for the executions to happen. I've obviously hit sell, but like
It's because the bid and ask is so
Why is it
wide right
crazy?
now and everything. That's why.
yeah.
1 minute.
Oh, 1 minute. Come on.
Look at that. Look at you DJs
Yeah, at least give
over
me a double bottom at least, and then go bullish. Go back to 371.
When it comes, baby.
I mean, whenever like when the bid and the ask, like, or like your average price is one thing, the price at the moment is super low, but like it says your put and loss is up 400%. Like, I'm really confused.
Where's all this shit real quick?
The volatility right now, super juiced.
Where is this motherfucker?
Oh my god! Look at the volatility. 120%. It's fine. It's fucking crazy. Nuts.
Here he
Jesus
is.
Christ. Oh.
Okay, there he goes.
There he is.
Everything's fantastic.
I will begin
This is
with
transitory.
one overarching message. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving
Okay.
expeditiously to do
All
so.
right.
We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment
She's
and
coming
price
down.
stability,
Down it goes.
the current picture is plain to
Yep,
see.
she's coming down.
Yep.
The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter,
Oh yes.
with consumption spending
Oh,
remaining
yes.
strong. In contrast,
Oh my!
growth in
Things are going on
business
down
fixed
in my pants right now.
investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates.
We're about to be up 200.
The tightening in financial conditions that we've seen in recent months
go.
should continue to temper growth
1.5.
and help bring demand into better balance with supply.
Come on, baby.
As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real
Stop,
GDP growth
just in case.
running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food, and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, resulting in a 1.5% increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen.
Can someone send a link in the Investors Lounge chat?
This year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March.
Look up
and
FOMC
0.9
press
percentage point above
conference.
the median estimate of its longer-run value.
I just put it in our Investor Lounge and the other chat.
And declines to 3.4% in 2024. still above
Yeah, it
the
is on the
median
live
longer run
trading
value.
stage and the
Of course, these
investor
projections
lounge.
do not represent a committee plan or
did
decision,
you say to
and
type
no one
into
knows with
YouTube?
any certainty where
Sweet,
the
I got
economy
it.
will
Thanks,
be
man.
a year or more from now.
It's already there.
Got a lot of from BlackBerry.
Over
Also
coming months,
bullish on BlackBerry.
we will be looking for compelling evidence that inflation is moving
Chat
down,
right there, huh?
consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy.
Back to where you started.
Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions
sold out
meeting
on
by
that
meeting,
there, Mom.
and will continue to
$300
communicate our
a
thinking as
contract.
clearly as we can.
Oh no, I sold.
Our overarching focus is using our tools to bring inflation
I'm done.
back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We were highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
He's just saying stuff without
We
saying
at the
stuff.
Fed will do everything we can.
Like he's just
to
saying we're gonna
achieve
take
our
it meeting by
maximum
meeting.
employment and
It
price
doesn't
stability
guarantee that
goals.
he's not gonna do a
Thank you,
100
and I look
basis
forward to
point
your
hike.
questions.
It's just dumb.
He just said 0.5 to 0.75.
Thank you. Howard Schneider with Reuters. Two related questions. Chair Powell,
What they do,
do
they
you
talk
feel
a lot
you
of things
boxed
and
yourself
they're
in with the
answering
language
these
you used at the last press conference
I'm
on
deaf
50
myself,
basis
so
point
it's the only
hikes in June
question.
and July? And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook. So, and I think over the course of this year, financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it. And of course, when I offered that guidance at the last meeting, I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data and also some data on inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
That's why we're bullish right there.
Thanks for taking our question. Gina Smilik with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have, and why not just go for a full percentage point at some point?
Sure. So if you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels.
Could take spot up
over
here,
the
this
course
top
of
range.
the 7 months since we pivoted and
Yep.
began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move,
Not a chance
is at
Tesla breaks 700
1.6%.
today.
So again, the committee is
If it
moving
does,
rates
that'd
up
be
expeditiously to more normal levels. And we came to the view that we'd like to do a little more front-end loading on that. So I think that the SEP gives
You
you
have
the
what,
levels
Montana?
that people think are appropriate
Let's say
at given points in
706
time.
up next.
This was really about the
Tesla.
speed with which you would get there. So as I mentioned,
That's
75
704.
basis points today. I said the next meeting could
702.
well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second, what it really says is that committee participants widely would like to see policy
Look at this
at
bad boy
a
climb.
modestly restrictive level at the end of
Didn't
this year.
Bull
And
just
that's
say
6
fuck
months
on
from
his
now. And
SPX
so
calls
much
they
data and
had?
so much can happen. So remember how
And now they're
highly
at
uncertain this
6.6.
is. But so that is generally a range of 3 to 3.5%. That's
Damn.
where people are. And that's what they want to see, knowing what they know now
Bottom too
and understanding
early, you
that
gotta
we need to
wait.
be we need to show
bottom down,
resolve, but
bottom
also be
there.
flexible to incoming data as we see it. If things
Dude,
are
it's
better,
perfect.
we don't need to do that much.
500%,
So, and if they're not, then we either do
You're
that
at
much or
500%
possibly
on
even more.
what?
But in any case, it will be
Well, say
very
if you got
data dependent.
SPX calls,
Then
if you
you're looking at
waited,
next year, and what you're seeing is
and then
people
you
see more,
decided to go in
a bit more
calls,
tightening and
let
in
the
a range of maybe
volatility die
3.5
out
to
or whatever
4%.
some,
And that's generally
or
what people
500%.
see as
Yeah,
the
I think
appropriate
that
path
drop that we just had there was just
for
stopping
getting
people
inflation
out.
under control and starting back down and then getting back down to 2%.
Powell comes on, turns the money.
So
printer back
75
on.
basis points seemed like the right thing to do at this meeting, and that's what we did.
If only I held my TQQ shares for the day.
Steve Leisman, CNBC. Thank you for taking my question,
Nice
Mr.
little
Chairman.
$200 profit
You
right
have
now.
not used the phrase in a long time, monetary policy is in a good place, which is a phrase that you used to use often. Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year, do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5 to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also look at the yield curve and ask all along the yield curve, where is the policy rate? So for much of the yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of financial conditions. So I think I have to look at it this way. We move the policy rate, that affects financial conditions, and that affects the economy. We have, of course, rigorous ways to think about it, but ultimately it comes down to, do we think financial conditions are in a place where they're having the desired effect on the economy? And that desired effect is, we'd like to see demand moderating. Demand is very hot still in the economy. We'd like to see the labor market getting better in balance between supply and demand, and that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still, pushing upward on inflation. So that's really how I think I would think about it.
I am done for today, boys.
I think it's certainly in the range of plausible numbers. I think we'll know when we get there, really. I mean, honestly, that would be, you would have positive real rates, I think, and inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days. So I would think it would, but you know what? We're going to find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thank you, Nick.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at a broad range of inflation expectations, so you've got the public, you've got surveys of the public and of experts, and you've also got market-based. And I think if you look across that broad range of data, what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%. And so this is really very important to us that remain the case. And I think if you look for most measures, most of the time, that's what you see. If we even see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary Michigan reading, it's a preliminary reading. It might be revised nonetheless. It was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking, this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%.
Going down,
that was one of the reasons. The other was just the CPI reading.
I'm done.
So if you saw a movement like that again,
I literally
tick up
bought so
in
many
inflation
things.
expectations, would that put a 75 or even 100 basis point increase in play at your next
come
meeting?
down sharply in the next few years. Like,
You know,
are you
we're
kidding
going
me?
to. I'll just
I
say
sure
we're going to
hope it
react to the
does
incoming
next
data,
few years.
and appropriately, I think. So I wouldn't want to put a number on
Next
what that
few
might
years
be.
there won't be in the
The main
economy
thing
if
is to get rates up, and then pretty
I could
soon
go
we'll
up
be
on
in
the
an area
stage and
where
give that statement
we're
on
I think
down
as you
the
get
next few
closer to the
years.
end of the year, you're in a range where you've got restrictive policy, which is appropriate.
So with this 75
40-year highs in
basis point
inflation,
move,
we
what's
think
the
that
Fed
policy is
funds
going to
rate
need to be restrictive, and we don't know how restrictive. So I think that's how we'll take it.
Hi, Chair Powell. Neil Irwin from Axios. Thanks for taking our questions. The late-breaking kind of decision to go to 75 basis points, do you worry that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation, or if the labor market starts to roll over?
To take your second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. It's always a trade-off, because you have to live with that guidance. And so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause, even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point. And we'll react appropriately to that too. But I would like to think, though, that it's
so clear.
Is still
Yeah.
credible,
So
but it's
broad,
always going to be
man.
conditional
Like,
on
see
what
progress at
happens.
some point in
This is an
time.
unusual situation to get,
Well, I mean, if
some
you
data
do the pooch that bad,
late
like saying
during blackout, pretty close, very close to our meeting. Very unusual to one that would actually change the
He has no
outcome.
idea.
So. I've only seen in my 10 years plus
That's
here at the
what
Fed,
he's
I've only
saying,
seen
market is
something
he has
like
no
that,
idea,
even close to that,
right? And then you start
one or two
searching the market
times.
up,
So
just-
I don't think it's
There's
something
not a
that'll
lot
come
of.
up
I'm going to
a
say
great
that
deal.
there's definitely not a lot of confidence what he's doing right now. I averaged down Jacob, by the way.
Thank you so much for taking our questions. Colby Smith with the
Yeah,
Financial
I have it down
Times.
there at
On the
55
clear and
cents.
convincing threshold,
I really wouldn't be
for the
surprised if in the
inflation
next we see
trajectory,
a
what is
higher
the level of realized inflation
a higher
that
rate
meets
hike
that
next
criteria?
time. It just
And how is the committee
just
thinking
seems
about
like
the
he
potential
just
trade-off
doesn't
with
know.
much
He's
higher
so unsure.
unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
So, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series
He's still
of
talking.
declining monthly readings for inflation, and we'd like to see inflation headed down. So, and right now our policy rate is well below neutral, right? So soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you, that you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and we're looking, ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down. And that's what I mean by, that's what it would take for us to say, okay, we think this job is done. Because we saw, and frankly, we saw last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't, the monetary policy stance doesn't affect those things. So, but having said that, there is there's a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take for example in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So Jones SPXs are now.
You're right. In the SEP, we have unemployment going up to 4 point. The median is 4.1%. There are, of course, a range of
this
of
GGN
actual
is
forecasts, and I would characterize that if you were to get inflation down to.
If I told you,
oh
my God, bro, I cannot even express to you this fucking spreadsheet right now.
4.1%. That's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for
I did take a loss
in the last 50
on those SPY fucking puts.
3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
Does that include people losing their jobs, or?
We don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where, where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic. Where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see, disparities between various groups at historic lows. We'd love to get back to that place, but to get there, it's not going to happen with the levels of inflation we have. So we have to restore that, and it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Bosa with Bloomberg. So as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate in the SEPs over the next couple years. And it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though. So I'm wondering if you could explain why that line was removed from the statement, and also whether This means that FOMC is trying to
421%
induce a
on one of those
recession
by
now
our
to bring
SPX
inflation
options.
down.
Not trying to induce
Yeah.
a recession now. Let's
Did he
be
just
clear
say
about
we're
that.
not
We're trying to
reduce
achieve
the
2%
recession now?
inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that
Yeah,
sentence.
the reporter basically said, "Are you trying to
Clearly,
reduce
it's our goal
recession?"
to
He
bring
said
about
no.
2% inflation while keeping the labor market strong, right? And
means
that's
the Fed wants
that's
more
kind of what the
pain.
SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways
Here
have
we
become
come,
much
I'm
more
telling ya.
challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in
Oh
Ukraine.
no, I'm talking
which has brought
long-term
a spike
250
in,
SPY.
prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger or longer lasting than anticipated. So the sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. It just didn't, it just, the sentence isn't, it kind of says on its face that monetary policy alone can do this. And that's not, that just didn't seem appropriate, so we took the sentence out.
And given the new projections for the unemployment rate, could you talk a little bit about what accounts for, such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out? Thanks.
Well, yeah, I think you've seen, again, we've been expecting progress, and we didn't get that. We got sort of the opposite. So I also think the situation, really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. And you look around the world, I mean, lots of countries are looking at inflation of 10%. And it's largely due to commodities prices. But all over the world, you're seeing these effects. And so, and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really, and by the way, headline inflation is important for expectations. The public's expectations, why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to. So expectations are very much at risk due to high headline inflation. So it's become, the environment has become more difficult, clearly, in the last 4 or 5 months. And hence the need for the policy actions that we took today, hence our resolution to get rates up and ultimately get them to where we think they need to be in coming months.
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're, of course, watching very, very carefully for that, and looking at the retail sale, the big store numbers and all that kind of thing. And so, but I think the fair summary of what we see is you see continuing shifts in consumption. You see some things sales going down, but overall,
that'll help.
Spending is very strong. The consumer's in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending, but we watch everything. We watch business fixed investment, which actually has softened a bit. We're responsible for watching everything, but consumption is 60-some% of the economy, 2/3 of the economy. So naturally, we spend a lot of time on that. And again, there's a lot going on. There are a lot of flows back and forth, but ultimately, it does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
Thank you, Mr. Chairman. Michael McKee from Bloomberg Radio and Television. Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
So we're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But you know, the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too. Also, other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in, and we can't do much about the difference between the elements that make up headline that are not in core.
Could I just, as a follow-up, get a clarification on the SEP? When the members gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is of one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you've talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
So I think the role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right? So, and we'll be able to see the areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation that we're seeing, but going forward, they would be very important, particularly in the service sector. So, sorry, I'm not sure I'm getting to your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. We have to restore price stability. We really do. Because everything, it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to. It won't work for people. Their wages will be being eaten up. So we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation down to 2%, and that's critical. It's absolutely key to the whole thing that we sustain that confidence. So that's how we're thinking about it.
Hi, Brian Chung with Yahoo Finance. I just want to expand, I guess, on what you just said now about the general public feeling like, you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up, recession just broadly being dinner table talk, does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
So clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways. And we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So, but I guess what I'm saying is the question, really critical question from the perspective of doing our job, is making sure that the public does have confidence that we have the tools and will use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
Chris.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier measures of inflation increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to, and where do you see those going in the near future?
Yeah. So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. In particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. Some of that will be passed through of energy prices, but so you're experiencing services inflation. Shelter inflation is high. So the question, and you see the Cleveland measure going up, and many other measures are going up. So it's a time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the SEP looks like it does, is that we see it as appropriate to get the policy rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you see, you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%. I would call that as meeting that test. Do I still think that we can do that? I do. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges. And again, the answer to the question, can we still do it, there's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands. So we just don't know. But we're focused on, very, very focused on getting inflation back down to 2%, which we think is essential for the benefit of the public, and also to put us on a path back to a sustainably strong labor market like the one we had before the pandemic.
Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer, and that now there's even more risk of a recession than a 50-50 path of rates. So could you talk a little bit more about that, and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. And even if we did another, we're going to get here by the end of the summer somewhere in the 2s probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the 3 to 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So again, we'll be determined and resolved, but flexible.
Okay, Evan.
Evan Reiser, Market News International. Thank you, Chair Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given the inflation, and will that be shared with the public? And then secondly, given the illiquidity and extraordinary volatility in financial markets, are you concerned that QT will make that worse?
Sorry, what was your question on QT?
Just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
Are you still in those puts?
Yeah.
So, calls, whatever. Really?
Of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate the extent of interest we have in that question, morning, noon, and night. So,
Posty pivots.
But you have to put.
I am
understand the context
astonished right now.
Really, the context is this: for decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as.
If you heard me just tapping my fucking keyboard, buying and selling.
Aging demographics, let's call it that. Globalization enabled by technology, other factors, low productivity. So, and that's how all the models work. Is decades and decades of data. They look at that. It's a very curve work, and
I want to see what I close the day out as.
Transient, right? So we have now experienced an extraordinary series of shocks. If you think about it, the pandemic.
There's my close out of the day.
The reopening, inflation, followed by the war in Ukraine, followed by shutdowns in China. The war in Ukraine potentially having effects for years here. So we're aware that a different set of forces are driving the economy. We have been, obviously, for quite a while, that these forces are different. Inflation's behaving differently. And in our thinking, it really is a question of very strong demand, but you couldn't get this kind of inflation without
joking, bro.
a change
I
on
use
the
this
supply
camera
side,
really.
which is there for everybody to see,
pivots,
which is these
and just
blockages
tag
and shortages
those fucking
and
bottoms.
people dropping out of the labor force and things like that. So that's
was
how
ridiculous.
we're looking at it. And we've done a lot of work internally on and thinking about what all that means. You don't. The thing is, you don't know whether those forces are.
I was just literally
to
typing
what extent
F5
are they
to
gonna be
fucking buy and
sustained.
F8 to fucking
In
sell.
other words, will we go back to a world where that looks
I
a
gotta
little
do
more
that.
like the old world,
keep
or are we
my
really going to be in a world where
That's literally what I did for the
major
FMC,
supply
bro. I was
shocks
typing.
go on and
I
on?
have a certain amount
The
that you're
history
willing to
is
do
you see these waves
instead
of
of
supply
stop in
shocks
case
as you
it goes
did
the other way.
in the 70s,
Yeah.
and then they go away, and you
I
know
was
sort of
literally fucking
the new
typing.
normal
Oh
things
shit,
settle
I am
down.
fucking
But
crying.
honestly, we don't
Whew,
know.
I'm shaking.
What Camarilla do you use?
What that's going to be. In the
Camarilla,
meantime, we
Secrets
have
of
to
a
find price
Pivot Boss.
stability in this new world and maximum
That
employment
gives
in
me
this
my
new
inner
world where
lines.
clearly inflationary forces are, you're seeing them everywhere. Again, if you look around the world at where inflation levels are, it's absolutely extraordinary. It's not just here. In fact, we're sort of in the middle of the pack. Although I think we have of course a different kind of inflation than other people have, and partly because our economy is stronger and more highly recovered. So that's what we're doing. We've done a lot of introspection and work on that. And sorry, on QT, you know, we've communicated really clearly to the markets about what we're going to do
far, what
there.
I've been
Markets seem to be
realizing
okay with
is
it.
kind of like
We're
middle way
phasing
between the post and pivot lines, and it
Treasury
gives a
issuance
nice
is down
area of
quite a
reversal as
lot,
well.
quite a lot from where it's been. So I have no reason to think markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Thanks. For the last question, we'll go to Mark.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger
Oh, and you
for
could
the
have took
great
those posty
financial
pivots
crisis
and took
over a
calls
decade
right there.
ago. Thank you.
Oh my god.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and you know the need to
I sold those
do everything we
fucking
could
spy
to
puts for literally
support the economy
2 cents a
when
contract.
it was 14% and the true unemployment rate was well higher than that. So and that you know that was rates are low and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously, and so the demand was just suddenly much higher. And
5% today? That's sick, bro.
Very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? You know, not really sure. It's I mean, obviously we're watching that quite carefully. You would think over time. I mean, so there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. You know, I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way that where the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So thank you very much.
So is this bitch finally gonna start coming down or what?
I don't know.
It's looking at the $400 calls for actually for the end of this month. They're like at $3 and some change.
That is not a bad play. Not a bad play at all.
Or do we end up getting broken up here with some certainty?
So actually, right now, $1.87 a contract for the $400 for June 30th.
That's not bad.
Oh yeah, I am done for the day. I'm gonna bounce out of here. And a little tiny small gain there on calls on this last little rip here. I played this right here and was able to snag myself even tiny bit more gains. Playing the break out of that there.
That there bull flag.
Yep, what's going on, guys?
What's going on, guys?
What'd you say? Who? Somebody lost? Somebody blew their account on puts? Who? You?
Yeah, boy.
Wait, you said that you did? Oh, okay. All right. Yeah. Tell him that Licknack said that not one trade should make or break you. Yeah.
Well.
Okay. Yes. Very, very important. Okay. As long as you're aware of what you did, right? That's good. Yeah, I mean, no, blowing an account is not fun. Logan, Clayton, if you guys don't have to ping chat, just go ahead and send a message